Hello there, I'm James Preston for Kalkine TV, and this is The Hot Performers, a show where we take a look at market trends that are sizzling. Today we're focusing on how small cap stocks on the ASX can impact your portfolio in 2022. Since 2020, the world economy has endured a rollercoaster ride. This has sharpened the focus of most investors and asset owners who look for stocks that are easy to acquire and offer long-term capital growth and portfolio diversification. Under this scenario, small cap stocks with good growth potential seem to be an apt choice for an investor's investment portfolio in 2022. Amid this backdrop, let's take a look at the performance of the S&P ASX Small Ordinaries in 2021 and a few small cap stocks. The S&P ASX Small Ordinaries Index has performed well when compared to the benchmark index S&P ASX 200. In the past year, the S&P ASX Small Cap Ordinaries has delivered a return of 21.69%, whereas the S&P ASX 200 delivered a return of 18.39%. Similarly, if we see the year-to-date performance of these two indices, we can see that S&P and ASX Small Ordinaries surpassed the S&P ASX 200 performance. S&P ASX Small Ordinaries delivered a year-to-date return of 14.74%, whereas the S&P ASX 200 index had a year-to-date return of 11.96%. S&P ASX Small Ordinaries Index is a benchmark index for small-cap Australian equity portfolios and is intended to evaluate companies included within the S&P ASX 300. On the other hand, the ASX 200 index comprises of the 200 biggest index-eligible stocks registered on the ASX by float-adjusted market cap. So what are the benefits of including ASX small-cap stocks in a portfolio? Compared to mid-cap and large-cap stocks, small-cap stocks have significant upside growth potential. As a result, small-cap stocks help passive investors to boost their returns. Small-cap stocks have a market cap between 300 million to 2 billion Aussie dollars. Another advantage of including small-cap stocks into the portfolio is that there is a high merger and acquisition chance. With this, large companies get access to new markets and to the intellectual property of the small companies. So here are two small-cap ASX stocks with significant growth in 2021. First up is Queensland Pacific Metals, which is a nickel exploration company. The company owns Townsville Energy Chemicals Hub. In 2021, the company has delivered a return of 671.42%. Queensland Pacific is trading at 25.8 cents with a market cap of 359.23 million Aussie dollars. On the 27th of September 2021, the company provided an update that the Queensland Government had declared Queensland Pacific Metals Townsville Energy Chemicals Hub project as a prescribed project. A prescribed project is considered an economically and or socially significant project to the region, in this case Queensland. This declaration also grants the Coordinator General the power to intervene if necessary in state and local government approval processes to ensure timely decision making. The tech project is in Townsville and is being developed into a sustainable producer of critical metals for the lithium-ion battery and electric vehicle sector. Time now for a very short break on The Hot Performers before we turn our attention to luxury goods retailer Cettire. Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With Kalkine TV.
Thanks for tuning in to Kalkine TV. I'm James Preston and this is The Hot Performers, a show where we take a look at sizzling market trends. In this edition, we're taking a look at small cap stocks and their ability to impact your investment portfolio. Let's now turn our attention to luxury goods retailer Cettire. Cettire sells various items from more than 500 designers comprising of women and men's clothing from world-renowned brands like Saint Laurent, Gucci, Prada and Valentino. The company made its ASX debut on the 18th of December 2020, and in 2021 its shares have delivered a stunning growth of 548%. Cettire is trading at $3.16 a share with a market cap of 1.21 billion Aussie dollars. Financial year 21 was an exceptional year for the company, with significant growth in the number of active customers, robust revenue growth, product margins and a rising proportion of revenues from repeat clients. The company implemented several important improvements to its consumer proposition that involved embedding free returns and increasing its addressable market by means of its entry into the children's wear division. So, to sum it all up, these small cap companies have performed exceptionally well during the pandemic and have showcased the potential that small cap stocks offer if they are part of a portfolio. So, it might well be time to update your own. Well, that's all for the Hot Performers exclusive to Kalkine TV. Make sure to keep watching for the latest market updates and business news. I'm James Preston, signing off for now.